We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all the subscribers, welcome back. I'll ask for in return this video, smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index, and earlier this week I made a video on how the largest banks are stating that we are going into a crash, right? And I talked about how this forms opportunity and how to handle it, right? So I'm going to break it all down here with 42 vision, which is what you see here in the candlesticks and in the charts on the 1 day and the 30-minute. I'm going to share my opinions as well. And is it time to go all cash or to sit on the sidelines? What time is it in the stock market? But before we do, I want to share with you guys the opportunities I mentioned this morning over at the Discord. Check out the link down below in the description if that's something that interests you and you want to become part of. And we're going to jump into this video and I'm going to break it all down. And is it time to go all cash? The home runs of the day were spectacular. Every single stock I mentioned this morning turned out to be a home run. And even though the S&P 500 index continues to go lower, struggling to get back to all-time highs and is in the red, and portfolios are sitting sideways or in the red as well, I will continue to look for opportunities daily, and this is something you can become part of as well. Check out the link down below in the description to the Discord, and by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So I mentioned IPHA, CRVS, and HLBZ. So when we go ahead and look at these charts, you're going to see how they performed. And this is 42 vision as well. You can see when the rips happen and the weakness happen. But I mentioned this one in the pre-market, and it took off to a highest point of 40% plus, and there was multiple opportunities of 10 to 20% moves in between it from the moment I mentioned it all the way to the top. Then we have here our highest performer of the day. It was HLBZ, and this is our third 100% plus opportunity caught this week alone. We mentioned it in the pre-market, took off for 50% plus, sat sideways, and took off to a 120% plus move. And then we have here IPHA, and you can see a little bit better here how 42 vision looks when the momentum is happening and when the shift into weakness happens, right? That's what it's all about, and you can gain access to that as well by checking out the 42 vision tier level. But IPHA caught this one in the pre-market sitting sideways and took off to a highest point of 70% plus, and this happened in a matter of 15 minutes. And this is all something you can gain access to now. Check out the link down below in the description, and we look forward to having you join us. Let's jump into these charts. So the S&P 500 index continues to pull lower, further away from the all-time highs, struggling to get back up to it, and it continues to have red days, and it's been going downwards for nearly almost 2 weeks now, right? And we're going on to the third week of possibility to continue going lower. Now, if you just saw what the home runs were that I mentioned this morning and how they performed, we have done that well all week. We have found home runs all week, and we have found 3 home run opportunities of 100% plus in a single day while all of this is happening, okay? Downward trend, all the volatility, all the uncertainty. And I talked about in my last video that if you're an investor, you're not supposed to be worried about dips. You're supposed to be excited about them. Historically, they exist. There's no way to avoid them, and the media is going to make it look worse than it really is. Now, if it turns into a crash, then I'm with you. It is something concerning, and that's a 20% plus correction. So right now, where it currently sits, it would have to go down 900 points to actually become a concern of a possible crash. And 900 points would be all the way down from 4,500 all the way down to 3,600, right? That would be all the way down here, okay? Even below that, okay? Way back to what it was at the beginning of 2021, okay? That would be a crash if we go ahead and fall back that fast. I don't think we're going to fall back that fast, but we could end up in a pretty serious pullback or correction that will feel like a crash, which would be like a 10 to 15% pullback if this does not start transitioning back up or at least consolidate. Now with 42 vision, which you can gain access to as well by joining the 42 vision tier level, you could see here the shifts, right, of weakness and strength when the whole entire overall chart is going up or down. Now, when we're looking at this from the 1 day, which is what I want you guys to see here, we can definitely see that this is in weakness, okay? When a shift happens, we will see that red with green border, not like this one because this was sideways. It has to be significantly higher than that drop to look like a reversal. And then we would see the green, and it would show us that momentum is continuing. Every single time it's happened, it has shown us, right? When momentum has come back. Look at that all year round, okay? Every single time. So that's really what I'm waiting for, to get a feel of the reversal that is bound to happen. It's just no one knows the bottom. So the question is, do you go all cash in these moments? Well, it depends where you caught your opportunities. I mean, if you caught them a little too high and you don't feel like holding through the volatility, well, that is a personal rational decision based off your due diligence. But if you've been catching the dips all year and it's coming back down towards that dip, or it's a little bit below the 52-week low or getting closer to it, well, if this pullback continues, the worst that can happen is it comes right back down towards the 52-week low, or it touches a new 52-week low. And once that reversal happens, it's going to turn around and you're not even going to have time to catch it, because you're going to feel like you missed it. And then all that time and all that effort that you put into trying to time the bottom, you're going to be out of the market and you might not even have the best prices. And if you just average down, which is what I would do, average down into my best prices and just hold through the volatility, you might see a rewarding effect. But a lot of people are concerned about these several things. So the first thing is right here, how the NASDAQ closes lower in a weekly slump amid quad witching and a weak consumer sentiment. Okay, that is reasonable in the overall markets. Then the other thing we have here is that the S&P 500 companies have actually went ahead and inflation on the brain, as inflation mentions on earnings calls hit 10-year highs. Okay, basically saying that inflation is going to destroy their future earnings, their future potential. And remember, the stock market prices in things before they happen. So they're basically saying earnings won't look as great because of inflation. It's hurting us and all these costs are being deferred all around, but it's still hurting the business overall, and it's going to affect earnings calls to come. And after 10 years, it has never been mentioned this much in the earnings calls by companies. So that is something to be aware of as well. That's something that came out today. The other thing is fading retail demand for US stocks could hit the S&P 500. So that is not one of my largest concerns right now, because the whole entire retail demand has driven stocks higher. But at the end of the day, the stock market has always gone up without this retail demand. So that is something that they're using right now as an excuse, and they always want to blame retail, right? The hedge funds and all these articles on every little thing for everything. So it's not really retail. It's sometimes just excuses for hedge funds to take profits. Remember, they need to show profits. It's the end of the year. And then all of a sudden, if we fall down, right, into a correction, not a crash, because a crash would be huge, but a correction mode, it has to reverse eventually, because these hedge funds and all these market managers have to show numbers at the end of the year, unless it just completely is destructive and it hurts everyone. Like everyone goes down. There is nothing to like go ahead and boast about, and this continues to fall. But even though the market continues to pull back, I want you to know that there's opportunities daily in the market and weekly, okay? It's not something that you'll be able to get in and hold or think that it's going to completely go up to 100% or 50% up. But there are 5 to 10% moves, 10 to 20% moves, and 20% moves daily and weekly happening. And that's something you can gain access to. We did it all week this week. We've done it every week before. We're going to continue to do it. And when there isn't an opportunity, well, it is safer to sit out. Just watch what's going on and go ahead and take advantage of the days that make sense. But I haven't sat out for 3 months, okay? And even through this pullback, I did not stop all week. I kept it going, and I have found home runs every single day. That doesn't mean it's guaranteed to always happen, but the opportunities can be found. So I don't want investors to feel like because the stock market's pulling back, that's when you're supposed to stop investing. That's when investing is supposed to start. I want you to remember that. Investing is not supposed to start when stocks are going up. That's when you're supposed to sit on your positions and ride the momentum and profit. You're supposed to buy when the pullbacks are happening. That's when investing begins, not when it ends. It ends at the peaks, and on the way down, it's when it begins to start getting the positions that you want, the opportunities, and maintain your high conviction stocks really close and get them at the best average cost. I hope this video helps, and as always guys, thank you guys so much for watching, and share this with a friend so they can receive this insight as well, these motivating words, because I do want everyone to be aware that yes, we could fall into a correction or crash, but it does not mean to give up or stop investing. It is something to be more cautious and pay close attention to what's going on and get in and get out, make the best out of every opportunity, buy the dips, sell the rips, but it does not mean go all cash and just wait to see if you can catch the dip or the bottom that no one knows. But if you are in some stocks that are high growth or high multiples and they're not really stable and you don't have high conviction in them, well, that is something you may want to go ahead and reanalyze. But as always guys, let's make some money, and thank you guys so much for watching.